Look at the broader markets, what's going on in these S&P sectors, maybe a few stocks. Depending on where you look, it's treacherous, bullish uptrends, and bearish downtrends. So very diverse market. It isn't throwing a dime type of a market here. But let's start with the S&Ps. As we could see, based on the drop, which was created by new tariff news, which went away the next day, there was a violation of the uptrend on the S&P 500. Now, how do we define that? Well, define an uptrend, higher highs and higher lows. And the prior low, which we could define as being major support, the low prior to a higher high, was violated on that break to the downside on a closing basis. So it's no longer in an uptrend. But news came out the next day, rallied it all the way back up into the gap fill. And as we go into this week, which is filled with news, earnings reports, Fed announcement, the Fed isn't going to do anything. Inflation is picking up, hasn't been communicated yet, but the charts say it is. Gap fill. And so now, can it continue to move up? Deep retracement, or does it roll back over here? We're going to see. Let's take a look at some of the problems and some of the positives. One of the problems is financials. Why? Well, the president said he's going to put a cap on what they can charge on credit cards, whether it's upwards of 20+%. He said he wants to put a cap of 10%. I think that's good. Credit card users, as they're using them for whatever reasons, they're not paying on a monthly basis. At least it's something reasonable. And so we see these financial stocks that are heavily into the credit card business got clobbered. And it looks like they're going to go lower. And we can sort this by what did terrible on the week, see what it is. Well, that's not a credit card business, but coin going down. And Bitcoin is in a very precarious position. We'll see how that unfolds this week. But here we go. Crack to the downside. Asset management going down. Blackstone asset management going down. Another asset management. These aren't good things for the broader markets, but so far the markets are holding up. And it's JP Morgan breaking down there. And there's some positives, and we go the other way. And so while it's going sideways, it hasn't broken down. Another asset management and regional banks. Now, the regional banks got clobbered on Friday. Let's take a look at that. Here we go. So they look good. They were questionable at the end of last year. They came up, the pullback, and the wide range bar breakout, and the deep retracement, which created this topping tail on the weekly time frame. So whenever we see a retracement back into the wide range bar on the bottom of the wide range bar, it's short-term bearish. Now there's all this support here. Can it regroup and push back up again? We always give the benefit of the doubt to the uptrend in multiple time frames. Rising 20, rising 50 is equal to the 10 on the weekly. So weekly is up, and the 200 is equal to the 10 on the monthly. So overall constructive, short-term questionable. We'll see if that holds up or not. Now, some of the regional banks, that one held up. Which way? Got this sorted by the positive ones. Let's look at some of the negative ones. And there you have it. Collapse. Another one. Another one. Another one. Another one. So regional banks going lower. The bigger banks going lower. That's not a positive, of course. Now let's continue to look around. Let's find a positive. Double-edged sword here. Materials have done nothing for quite a long time. Look at the weekly time frame. But look at the monthly breaking out. Now, you have metals in here, sorting this by bullish moves. Chemicals have started doing pretty good. Well, they were doing good earlier. But now we've got agricultural stocks pushing up. So if ags are going to be going up, and that increases the cost of things that we buy based on that, and if we start looking at interest rates, which spiked above resistance last week, and interest rates are going up, ags going up, chemicals going up, those are inflation concerns. Well, we'll see how it plays out. It's not being talked readily about yet, but we're keeping an eye on that. In addition, there's a dividend here that pushed this down, but now there are rumblings about the dollar collapse, carry trade with the yen. And so this not only went down against the yen, it also went down against the euro, the Canadian dollar, and others. And so those are inflation concerns because as the dollar goes down, Americans' buying power goes down. Those dollars go less, and those products that are made overseas go up in cost. Now, companies that sell overseas, those currencies are worth more. They can buy from those companies. It's a positive for them, but this is really a balancing act that's going on here that's a little bit of a game of chicken, so to speak. As we look at other sectors, communications, it's just been kind of treacherous out there the last few weeks, primarily based on news because positive event and then, breakdown. Healthcare is kind of a defensive, but also growth, and it's kind of been improving. AI as it relates to healthcare, of course, which is a good thing. Biotechs have been doing well. Now, another defensive sector which really blasted off was consumer staples, which has been dead money for the longest time. And that blasted off. That's a defensive sector. So money is moving into these defensive stocks, because we want to see what they are. And the herd institutions just move together. But with that wide range bar, if we had seen it in the moment, there's so many different stocks to look at, but wide range bar igniting. This one just getting started. Monster Beverage. It's been in an uptrend, and there was a wide range bar and a consolidation. Now we look to the left, and that's new all-time highs, and so that looks like it'll continue to go higher. Dispensary, not so good, but look at the money coming into Procter & Gamble, which has been in a downtrend for such a long time. That's the beginning of a move, and that was on earnings, so that is a good thing. It's still declining 200 MA. Packaging, foods, improving. This is what we call a downside shakeout, where it's been in a downtrend, it spikes to the downside, it immediately comes back up again, and now it's starting to go sideways there. So this is one to keep an eye on. You can see the downtrend it's been in. Kind of climactic on the monthly now, bottoming tail bar, but this going sideways here for a little while. I'm going to set an alert on that, see if it pops up into that resistance area, and then see how it reacts. Now, not everything is done well. You can see, that one collapsed. Another packaging food, Dollar Tree. Well, this has been doing well. Discount store, and now it breaks to the downside a little bit. We'll see if it can rebuild, but this is another sign, not such a great sign. Discount stores and are this thinking that consumers are going to back off a little bit, even from the discount stores. And we could look at retailing sector, which has improved lately, but that got beaten up a little bit the end of last week. There's a lot of uncertainty. So it's still in an uptrend. It's holding. We'll see how it's going to do. This one is just pulling back. I'm going to watch this and see if it can get turned around, even though it's pulled back a lot. There's one that broke down under two prior pivot lows. That's not a good sign. ANF, we have a short in this in our advisory letter and in the green room. And so you can see some pretty negative stuff going on out there. What's doing well? O'Reilly Automotive. Kind of, not great. Coming off of the low, got that resistance there. We look for things that have room to run. Now, this has got a large bottom. I look at the weekly chart. Whenever I see a messy chart like that is kind of catching my attention, that it's improving, I want to look at the higher time frames. And I like the monthly and I like the weekly. I don't like the fact that the 200 is lurking up there. $100 whole number aligned with that pivot, which tells me that the upside in the short term is limited, but it's improving. So this is one we want to keep an eye on. It's a discount store, specialty retail, Ultra Beauty. I guess women need that makeup no matter what's going on. So that looks pretty darn good. There's another bottoming. We're just trading a lot of these bottoming stocks. Some are working out really well. Some getting whipped around. It is what it is. And last week we were trading some climactics. Software companies are getting decimated. You can see these climactics that get far, far from the 20, and from any resistance they can pop back up in the short term. Odds are it'll come back down again. But software sector is gotten beat up pretty good. You can see the breakdown that occurred there. So software is deeply out of favor because of AI. A lot of those companies are going to have to restructure. based on their models. We see technology, this coiling spring, as I've coined it, that the volatility is contracting. These aren't trend lines. These are to depict the fact that the contraction and the distance between highs and lows are coming together. And so it broke down on that news and immediately came back up again. We'll see with these earnings reports that are coming out. A lot of tech earnings this week, some semiconductors, even like IBM and some others. So we'll see whether this can break one way or the other. Utilities, this has been an AI theme. You can see the strong uptrend, and it corrected a lot with the so-called AI bubble popping. But this is beginning to rebuild. You can see this sort of head and shoulders type of a bottom here. I'm watching this to see if this can turn around. And one of the favorites, you might remember last year, was this Constellation Energy, which took off based on AI. And now this is broken down. So you have to be nimble in this market. And if you're not adhering stops, you're not going to be around very long, because some of these, the way they break down, they're not going to be coming back in the short term anyway. It'll take time. Now, this real estate sector, which was breaking down, another example of the treachery that's going on. It was breaking down like it could go lower, right? What else would you think after consolidating that long and then breaking down, and then immediately comes back up again? So improvement, but still a mess. Now, from a broader perspective, look at the NYSE composite. Nice uptrend. And this is the kind of price action that keeps and should keep your bias somewhat neutral, the negatives and the positives, because a broad index like this, when there's a wide range bar to the downside, which it's broad and it's big, it's bigger than any of these others, and immediately gets reversed like that, that's a positive. Now, if it can go sideways, that would imply it's going to break out. And so you can see there's, over 1,000 stocks in here, and we can start looking for, bullish bars, which there's gold in there. You can see this starts pushing up. Minerals, and there's a correction bar. Mineral stocks, minerals, and you see the same silver things, but the same areas of sector analysis. And minerals, there you go again, and gold. And so there's a one at resistance, telecom services, and we start looking for other things, of course, like maybe there's bearish wide range bars in there, which there should be bearish, but a breakout. That says keep an eye on that. Earnings came out and it gapped up. So as this pulls back, this is one to keep an eye on. A regional bank came down kind of hard. Weekly bottom there. So they don't all look terrible. It's a really selective market. There's another regional bank, household products, consumer staples, and so on. So as we look through all of these, it isn't throwing a dart. Another regional bank coming down real hard. Diamonds with slopping back and forth. The Qs and slopping back and forth for months. So we've got like semiconductors moving up, SMH moving up in a nice uptrend. And on the other side of it, we have software breaking down. So it keeps the index in a trading range virtually neutral. But if you're in the right things, great. And if you're in the wrong things, you're getting killed. And if you're in the ETF, you're just marking time doing nothing. Let's take a look at the transports, which look pretty darn good. And these have been lagging for the longest time, and they break out. So there's another positive. Another positive would be the Russell outperforming. But that came down because of the regional banks pretty hard at the end of last week. We looked at interest rates, and I think it's going to be a little tricky. And if you haven't heard already, the president came out saying 100% tariffs on Canada if they do business with China, form some partnership. So it's not over. And we're going to have more volatility and whippy price actions. So maybe take a trial to the green room, spend some time with us. If you have questions, give me an email, Greg@MasterTrader.